Awesome. Welcome. Today is July 31st, 2024. It's the last day of the month, and it's a great day to have a great day. We wake up, so we bless. And my boy CJ says, we woke up, so we bless, coach. All right, but yeah, welcome, guys. Today's the last day of the month, and also a very important day because we have Fed rate news today. We had some news this morning that just passed, like ADP, but we actually have the big event, which is Fed rate. And when we talk about the Fed rate, we're going to be talking about more of that. Also do some markups and tell you guys what I see. Let me go ahead and share my screen. So, as always, I'll start off with news. Okay. Now, this morning we had ADP non-farm employment change, and nothing really happened. It's right now it's consolidating. Gold is consolidating right now. There's not that much movement when that news happened. The dollar is dropping though. And gold right now is in consolidation. It shot up after the 150 pip move and broke above 2405, came back to retest, and then Tokyo session it shot up again. And now it's consolidating. See here. We had news at what time? It was at 5:15, 5:30 this morning, 30 minutes before our call. It was right here. News is right here. We didn't do much, just stayed around the same area. So let's wait for the next break of structure. It could break either to the upside or downside. We have the lower high here around 2430 area. And this is our high, higher high, lower low, lower high, lower low. And it may create a lower high here or an equal high. If gold breaks above 2430, we could see a continuation to the upside. However, if it remains below 2430, it could retrace back down, liquidate all these buyers. There's all liquidity here. Like I said, this morning we have Fed rate, federal funds rate. What does that mean? Well, this is the interest rate at which, the institutions, lend balances. Institutions lend balances held at the Federal Reserve. This is concerning interest loans, mortgages, credit cards, it affects all of that. And it's been at 5.5 since the past year. And you go to forexfactory.com, look at the folder, just go back in time. They'll give you all the dates here. Since, let's see, May 3rd of last year, it's been at the same percentage. Actually, not July 26th, right? July 26th, actually. It's been at 5.5 since then, right? Since July 26th, June 14th, it's been at 5.25. But since July 26th of last year, it's been at 5.5%. Now look at this, guys. Back in 2022, it was at 1.75. Look at that. And then, let me see. Pre-COVID, it was less than 1%. It was at 0.25. You see, now over the years, it has been gradually increasing. Now the target is 2%. They're saying that they're going to cut down rates starting in September. So that's good news. So we have that going on in about, what is it? 7, 8, 9, 10, 11, 5 hours. Federal funds rate, FOMC press conference. Jerome Powell will be speaking. He'll be doing his, his typical speech. He'll be saying our target rate is, 2%, and we're really confident that, we're seeing, he does his thing. So you guys can go to federalreserve.gov to check out the press conference. It's trying to mock him. But you guys can go to federalreserve.gov, check out the press conference, which is very important, to check out. So you guys can, stay up to date on that. All the answers are in front of you guys. Like, you guys can check out this website and they literally give out like all the answers and what you're looking for. They'll give you more info, they'll give you articles, Let me go ahead and copy this and post in the chat for you guys. You guys can check it out. Yeah, I was looking at the 4-hour time frame starting off. There he goes. Does that mean gold will drop since it's good news? Yeah, gold will drop. I do see gold dropping because last Federal Reserve meeting, they paused it at 5.5 and gold did drop upon New York open, and then it dropped when the Federal Reserve hit. But listen, it may drop, but it's actually gonna retrace down before the buy up, because gold, regardless, is gonna go to 2,500. I've not been calling out 2,500 for months now. It recently just hit all-time high. Now I'll show you guys why. Every time after every Fed rate news, a new higher high is created. And I can show you guys. Here. At the end of the day, it's all manipulation. When you look at news, it's all manipulation. It's all liquidity sweep. Okay, and I'll show you guys here. Proof that it's been creating higher highs after every Fed rate meeting. Make sure everybody's muted. Guys, when you guys enter the call, please mute yourself. I'm trying to figure out how to do it here on Zoom, but so that way I gotta go to settings. When you guys enter, automatically mute you guys. But look, let me see. So we're here right now, okay? This is our current all-time high around 2483, okay? I have 2,500 here marked up. The last Fed rate news was on what, June 12th? Last Fed rate news. It was right here. Okay. It's consolidating, then it shot up, went back down again. And then let's see, it was like over a week later. A week later, it shot up, created all-time high. Boom. Let's look at the one before that. The one before that was on May 1st. May 1st, it's the same thing, right? Came down. We're on a bearish run here. Start consolidate and drop back down again. Fed rate news hit after Fed rate news. A week later, shot up and created this all-time high, 2450. You guys see the pattern? Let's look at the one before that, March 20th. March 20th, Fed rate news shot up, then down. A week later, shot up, created this all-time high around 24.20. Went on the bearish run, boom. Fed rate news, May 1st. Accumulation, and then shot up again and surpassed this all-time high and created this one, 24.50. Boom. Accumulation, shot up, created this all-time high, shot back down again. Boom. Accumulation, Fed rate news, June 12th. A week or two later, shot up again, shot up. And this is our current all-time high, surpassing this all-time high. Now we're here again, went on a bearish run, accumulation. We have Fed rate news today. It may accumulate and then shoot up to 2,500 and above, surpassing this all-time high. You guys see the pattern? So after every Fed rate news, there's a new all-time high being created, right? So you guys want to look at the bigger picture. So we may see a drop and then accumulation, and then a week or two later, it will shoot up. So you guys can position yourself. You guys can take like a swing position for a buy and hold it all the way to 2,500. But we gotta look for the support, right? The support could be around 2385 area, 2400 area. We could see a strong support before the buy up. So I'm showing you guys here, bigger picture of what's possible. So after every Fed rate news, there's a new higher high being created. So after this one, we could see gold going to 2,500 plus. So I hope you guys are getting this, because when I was back testing this, I was like, yo, there's a pattern happening here. It's like, yo, it's doing pretty much the same thing. You know, we went on a bearish run. It started to accumulate just like how I did last time, right? And it's creating an all-time high after every Fed rate news. So yes, we may see a pullback. We may see a retracement back down to my accumulation zone, but it's only to prepare ourselves for the big buy. So, but yes, we could see a big push down and use it, because we do have all this liquidity here from all the buyers who've been on the buys. Always been pushing. Right now is at close to my my lower high there. Okay, around 2430. You can see a big push down for the buy. So I like to start off by looking at the 4-hour. And then I go to my 1-hour. And I mark up my support and resistance zones. If you guys don't have the playbook, the 8-step confirmation checklist. Playbook is a step-by-step system that I created over the years. This is years of study, of back testing, of, testing it out. I've been able to compress years and years of study and information into this 8-step system. I'm going to share it here with you guys. but I follow this right here, the playbook. You guys can follow that. Thank you so much, Chi. So you guys can follow that 8 steps, those 8 steps to do your analysis. And this is years of study, guys. Okay. I've been able to, get information from Evan, from Jay Awal, from Dr. Josh and Brandon Boyd, from Mike Navarrete, and I compress it right in those 8 steps. And this is years of studying and back testing. And just by following this, guys, it changed the whole game for me. So I called it the playbook, which is an 8-step guide you guys can use to follow to to do your analysis, your markups. So like I said, I always start off at the 4 hours to look at the overall market direction. And then I go down to the 1 hour and I mark up my support resistance zones, my supply and demand, which I have here. 2430 is a strong resistance because we have activity here. We have a touch here, touch here. We have some touches here, right? Touches here. Support, resistance, broke above, create support, support turn to resistance, boom, downtrending. When support turns into resistance, that equals downtrend. Make sure you guys write that down. Support turns into resistance equals downtrend, and vice versa. When resistance turns into support equals uptrend. So in this case, support broke down, created resistance. We're now in a downtrend. Resistance, boom, shot down. Resistance, shot down. Resistance, shot down. So when you have at least 2 touches in the same area, it's a strong support or resistance zone. You want at least 2 touches. Boom. It's close to my resistance area there. Right now, assessing my 24.25 key level. Every $5 is a key level. So I could mark up my horizontal line here. This could be my internal zone, which is leading to the third step. I want to mark up my 15-minute internal zone. Could be 24.25. Going to the 15-minute. We do have an imbalance here as well. This bullish candle is an imbalance. It's a gap in the market, hasn't been filled. So it could it could push down to fill this gap. This is liquidity. This is liquidity here. Right now, it's building up liquidity. When you see consolidation, it's all liquidity. So after marking up my key levels for my horizontal lines, I like to take my rectangle and draw my zone. I go to my rectangle and I draw my hourly support and resistance zones. The width of my rectangle is 20 pips. Okay. $1 above and $1 below my key level. My key level are my psychological numbers: 24.30, 24.25, 24.20, 24.15. Like, so every $5 is a key level. And $1 equals to 50 pips. 24.31, 24, 24.29, 24.29. And you can apply this, these 8 steps, you can apply this to any market, any asset. But the only difference is going to be price. The way you count pips, the way you count price, the risk percentage is going to be different, especially when you're trading Forex. You're typically risking about 15 to 30 pips with Forex, but with gold, I risk 50 pips. 40 to 50 pips is a sweet spot for trading gold. So you risk more with gold, yes, but you're getting a high reward. So I'm gonna mark this up gray. 1, 2, 3, 4, 5. So my gray zones are my hourly zones, and then my internal zone is right here. I'm gonna mark this up blue. 24.26, 24.24. Right now it's in a consolidation, so I'm just gonna wait for the next break of structure. It could break above my zone or it could break below. So I'm gonna have just a horizontal line there. 24.15. Okay, my hourly zone down here. 405. 24.25 is a quarterly zone, by the way. We have quarterly key levels. We have whole numbers, we have quarterly, and we have halves. Okay. These are very, very important zones. Let's see, 24, 24.6, 4. This is my hourly zone. Boom. That's it. That's all the zones. I don't want to mark up too many zones. 3 are good. Okay. You don't want to mark up too many zones because then you'll confuse yourself. Just have your outer zones. Your outer zones are hourly zones. And then you have your internal zone, which is a 15-minute. Now, what's the next step on that list? Liquidity. Okay, where is liquidity? I just showed you guys we have liquidity here. We have liquidity here. We have liquidity here. We have an imbalance here. We have all these buys here, right? There's money. Where is the money? Where's my money? Just like Grant Cardone, where's my money? Right? You want to look for the money. Okay. So now that we know where's the money, okay, price could potentially go towards that area. It could wipe out that liquidity. It could take out those sellers, those buyers, right? You can use liquidity as a point of entry or as a point of exit. I like to use liquidity as a point of exit where price could potentially go. Okay, so if we know that we have an imbalance here at the bottom, right? We have an imbalance here. Price could potentially drop down to fill this gap. So we could look for sells when it hit my resistance, probably liquidate and then drop down. If it breaks above 24.30, we could see a continuation to the upside. But if it remains below 425, 24.25, 24.30, you can see a potential sells. 24.25 is a quarterly zone. 24.25 is a quarterly key level because we have, when it comes down to gold, we have these gold price key levels. Oops. We have major key levels. We have the majors, which is 2400, 2300, 2200, 2500, and so forth, right? These are the major key levels. And then we have halves, which is 2450, 2350, 2250, and etc. And then we have quarterly, which is 20, 24, 25, 24, 75. Oh, 24, 75, 23, 25, and etc. Okay. So you guys can make sure you guys can note this down. Gold kilo, we have majors, we have halves, we have quarterly. Right now it's testing my quarterly key level, which is 24, 25. And these are potential levels where you guys can take entries, especially on my major. You want to, look for major entries, major key levels for potential entries. So when it breaks above 2430, shoots up to 2400, not 2400, 2450, we could see a potential, break of structure. For example, here, we could see a potential break of structure to the upside, or it may react here and then drop down. Remind you guys, 2430 is also considered key level. But these, the majors, the halves, the quarterly are important to know because price could also, you guys can use those key levels as potential entries and, break a structure, break in retest. You guys see a break of structure, always wait for the retest for that entry. So here, for example, it's at my quarterly level. It could push up, down, break, retest, and then it hits my 2430 key level, and then drop down. It could liquidate, drop down, and then to reverse back up. We also have a lot of liquidity here. $2,400. We have 2,400 right here. Now, after like looking for liquidity, look for break of structure retest. That's step 5. Then confirmation candle. Wait for the confirmation candle after that break of structure before you take any trades, before you take any entries. Yeah, let's actually look at impulse. Just had New York open. 630 shooting up to my zone there. Let's see if there's going to be a break of structure here. Also, guys, you guys don't want to, rush any trades or, force yourself to enter a trade, especially because there's news happening today. It's best to just observe what's going to happen. You guys don't have to trade. You guys don't have to trade every day to become profitable. Today is, like I said, it's Fed rates. There's gonna be people waiting for news to hit. We actually have news less than a minute. We have Chicago PMI, right? We have pending home sales at the top of the hour. So there we go. We have the countdown right there. So we could see a move happening here. Even though it's a mild impact folder, orange folder. So we could see a potential push up, break a structure, or it can push down. So, but a lot of people are waiting for the Fed rate to trade the Fed rate news. So it's best to just observe what's going to happen during Fed rate, because a lot of people are going to be entering the market. So they're going to be, there's going to be a lot of volatility happening. There's going to be a lot of people entering buys, entering sells. And the moment news hit at the hour, at 11 a.m. Arizona time, 11 a.m. As soon as it hits, if price goes to the downside, if there's a bearish candle, people are going to be entering the sells, or when there's a bullish candle, people are going to enter the buys. Those are the average retail trader. Most people, they just enter the markets whenever they see bullish candle or bearish candle. Oh, bullish means buy, bearish means sell. I'm going to enter, but not knowing that they're going to be faked out, right? So like you guys want to be not the average retail trader, but do the opposite. Like you want to observe the masses, what the masses are doing. Most people are, entering the sells, entering the buys. Whenever they see a bearish candle, oh, I'm going to sell. Boom, enter sell. Oh, whenever they see a bullish candle, oh, I'm going to enter the buy because there's a bullish candle. When federal funds rate hit and then it causes a bearish candle, okay, I'm going to enter for a sell. You want to do the opposite of that. You don't want to follow the masses, because you're going to end up being liquidity. You're going to be faked out. And that's why people, trading new, especially for beginners, you guys, my beginners don't even trade today. Like just observe what's going to happen, right? There's a lot of activity going on in the markets. There's going to be a lot of, activity. There's going to be volatility. There's going to be, fake outs. There's going to be liquidity sweep. So for my beginners, use your demo if you want to test it out. Just use your demo. Don't use your live account. I highly recommend you don't use a live account. Start off with demo and just observe what's going to happen. If you guys want to participate, just use your demo. Don't use a live account, or just sit there and observe and just train your eyes. on watching the price move. But for my advanced and my people that have live accounts that have been here, that have skin in the game, make sure you guys are using proper risk management and use a 30-minute strategy. What is a 30-minute strategy? Wait 30 minutes after news to trade, to look for the move. Wait 30 minutes after, at least 30 minutes after news to look for a potential move. And just go based off market structure. Break and retest. Key level to key level. Does that make sense? Wait 30 minutes after news to catch the move. Don't enter the trade the moment news hit. As soon as you hit, okay, I'm going to enter. No, you don't want to do that. You want to wait after 30 minutes after news to trade. At least 30 minutes after to catch the move, to look for a potential move. If you guys don't see a potential move, you guys don't see an opportunity, don't even trade at all. Just, there's always going to be another opportunity. We have news tomorrow, right? We have news tomorrow. We have unemployment claims tomorrow. And then Friday, we have unemployment rate. We have NFP, non-farm payroll. We have NFP on Friday. So we have back-to-back news. You guys are going to miss on all these opportunities. Like today, yes, it's a big event, but it's not the end of the world if you end up not trading, or you'll still have your live account. Like you're not losing anything. You know what I'm saying? You have all these opportunities, and then you have the whole month of August, which is more opportunities. So don't sweat it. It's not worth the risk. We have all these events happening in the month of August, right? So don't feel like you have to trade today. Remember, guys, chase the skill set, not the money. I would take 2 weeks off, 3 weeks off, not trading, not entering a trade. I would just train my eyes and look at the markets. Okay. So for my beginners, for my intermediate, even my advanced, like if you're on a losing streak, if you guys it's not going your way, like just stop trading. Like just train your eyes, do your markups, study more than you trade, right? And just train your eyes looking at this. Don't feel forced you have to enter the trade just because other people are trading and they're catching profits. Don't feel like you're missing out. That's FOMO. That's part of the 3 psychological trading mistakes of a trader. Like, don't have FOMO. Step away for a moment. Just be like, okay, I'm gonna spend time to myself. I'm gonna study. I'm gonna lock in. I'm gonna focus. I don't care about others. Like, I don't care what's going on outside of me. Because at the end of the day, that's not gonna pay my bills. Like, why am I paying why am I paying attention to other people? Like, you know what I'm saying? So focus on you, focus on your craft, focus on locking in and training your eyes, looking at this. You don't have to trade every day, guys. Just know that. That one trade can make up for all the losses. Think about that. You had 2 weeks, 3 weeks, back to back to back losses, not going your way. But that one trade hits, and it's going to make up for all that. Trust me. I've had days like that. Now, as we can see here, we have a liquidity sweep. Gave me this wick. Liquidated all these sellers here. It hasn't broken above my zone yet. It just gave me that wick, and then it came down. So we're still below my zone there, my quarterly zone. Actually, go ahead and markups here. We have buying signs here. Everything's bullish. We have price above my EMA. Go to my 1 hour. 1 hour is giving me that micro trend arrow. We have the blue over red. Price is above my EMA, my primary EMA. I'm getting buying signs here, so we could see a potential break of structure above 24.25. Go ahead and mark up my horizontal line there. 425. $24.30. Five. If you guys have any questions, feel free to drop it in the chat. I hope you guys are getting some value here. 4, 5. So we have pending home sales in 5 minutes to the top of the hour. We have another news. You can see a potential break of structure there above 24.25. Go. We have that break of structure above 24.25. Is breaking above. Wait for that retest. The buy. Patience, guys. Patience is the name of the game. We also have my micro pivot line there. My internal zone there. I'm just like pretty much copy and pasting like my Marcos from TradingView on Impulse. 426. 4. So 5 minute. Have an hourly bullish candle. You could see a shoot up to 24.30 area. We could see something like this, guys. You see it was consolidating, shot up, and then shot down. Consolidating, shot up, consolidating, shoot up, and then we can see it shoot down again. If it breaks above 2430, we could see a continuation to the upside. If it breaks above, then it could react at the 2440. That's the next C level there. We could see another drop here. Down. Shoot up. We have some activity going on here as well. Resistance, hook above, support, shot up. You can catch a quick scalp move from my scalpers, 50 pips, 24.25, 24.30. From zone to zone. I'm not looking to scalp this though. Boom. Hour just hit. We had news. Pending home sales. And the next news event will be the Fed rate, which is in a couple of hours. We have Fed rate news. There she goes. She's pushing up. Just be careful. Okay. Catching the buy here to 24.30. We could see a reaction here as well. It could react and go down. $24.30 is a strong resistance zone. I just showed you guys what happened in the past. Look at the hourly. Why 24.30? Look, show you guys here. We have activity here. We have activity here. We have activity here. Which is also liquidity. This is liquidity. Higher highs, higher lows, lower lows, lower highs. That's also considered liquidity. Equal highs, equal lows. That's liquidity. This is liquidity here as well. It's imbalance. So price could push up, wick, boom. Impulse is still giving me buying signs. However, when it tests this area here, it could drop down. And then this red, this blue trend, this blue strength arrow can turn from blue to red at any moment. But yes, it still buys. And you can scalp this. As you guys can see, it's testing my quarterly zone. It's retesting. Broke above, wick came down. Let's look at this closely. There's like a spinning top, which is it's a confirmation candle for potential reversal. You can see it push down, then up. When you see wicks, when you see, candles like this could be a potential, it's a pullback, could be a reversal for the buy up. Yeah, news was pretty weak this morning. The ADP, employment, Chicago PMI, pending home sales. It just created this move, this bullish move. What was it, 645? Yeah, right here. And then here. So these two candles, these news, these two bearish candles, 515, 30. It went up only by a total of 40 pips. So that was pretty weak. A total of 40 pips. That's more of a scalp move. More like scalping. Catching 30 to 50 pips, 70 pips. 515 here. We had our micro pivot line there. Broke above, and now it's shooting up. So at 6:30 New York Open. The buy here was ideal to catch. And we missed that, but it's okay. Like, we're not rushing into it. So this would have been the move right here. 6:30 New York Open. Price broke above my micro pivot. this micro pivot line, you guys can use this as a counter trend line for break of structure. So I broke above and then shot up for a total of 120, 50 pips, a 50 pip move, 50, 60 pips. When you guys see wicks like this, you could see a potential push down. You can see it push down when it's wicking like this. Okay, it may drop down. Because when you guys see wicks like this, just know it's all liquidity. It's money being taken out, right? From these sellers, stop losses, right here. It's being taken out. So we can see it push down. So for example, if we were to enter the buy here upon New York open at this break of structure, like this is if we were to take any move, it would have been this here. But we missed it. That's okay. There's always another opportunity. But if I were to take a move, it would have been this right here, 2420, which is a key level. Like it broke above my micro pivot for 50 pips. Hold it, and then whenever I see this, I would exit because we could see it push down. So it's not just about entering the trade, but also knowing when to exit. You guys want to also have an exit strategy. Not just entering all the time, but also knowing when to exit, when to cash out, when to take profits. A lot of traders, they're greedy. They want to hold the trade and catch more pips and catch, and it's okay, which is fine. Like, I get it. But for example, me, like I look for 100 pips, 150 pip move, right? But whenever I see something like this happening, okay, I'm gonna catch partials. I'm gonna just close out the trade because we can see a push down, and I'll still be in profits. And when I see another opportunity, I'll just take that reentry. Does that make sense? So it's okay to, take partials. It's okay to, exit the trade with profits. When you see that it's gonna, like, whenever you guys see that you feel like it's gonna reverse on you, it's gonna, you know, it's gonna reverse on you. It's gonna consolidate. It's gonna start consolidating, right? It's gonna start consolidating. Then it's the best idea is to, exit to close out the trade. If you're looking for a 1 to 2, 1 to 3 risk reward, right? Holding it to 2430, but then it gives you this. Okay, it's best to exit and then look for another entry before the push up again. Because it could reverse on you and drop down. Hit your stop loss. So for example, right now it's giving me those wicks, it's consolidating a little bit. Yeah, so you don't want to be too greedy. When you feel like when you see price consolidating like this and giving you wicks, it could potentially reverse down. Then just exit, close out in profits, take partials, close out, and just wait for the next entry. Just wait for the next opportunity. When you have like 2 trades in, 3 trades in, 4 trades, so it's okay to take partials and just close out and just wait for another opportunity. So now it's giving me that bullish candles pushing up now. So yeah, guys. I hope you guys got some value. Drop a fire emoji in chat. You guys got some value. That's the end of the call here. I'm not gonna force any trades. I'm not gonna, tell you guys buy now because we see like, these buys here. I The ideal move would have been a New York Open here for 50 pips or more. But today is more of a teaching lesson, more of an education, markups, having patience. Just know that, there's so many opportunities, so don't feel like you're missing out. And today is like a very important day. So market will do whatever it wants to do. And yeah, so wait. So Fed rate, for those that want to trade today, I would recommend wait 30 minutes after the news, after Fed rate to catch a move, at least 30 minutes after. Um, but yeah, honestly, I'm not gonna trade today. I'm just gonna observe, see what's gonna happen. I'm looking forward to tomorrow though. Tomorrow we have unemployment claims, we have PMI, we have unemployment rate on Friday as well. So today I'm just gonna observe and just study. And then tomorrow I'll look for for an opportunity. I'll look for a position, and then Friday. So yeah, because knowing that a lot of traders, there's millions and millions of traders. Okay, there's gonna be a lot of activity going on. There's gonna be a lot of buyers, sellers, people, you know, entering sales, entering buys, and market will do whatever it wants to do. So I'm just gonna be the I'm gonna be the disciplined trader and observe and just study and wait for tomorrow, wait for another day to enter the markets. I'm not gonna risk it. So yeah, I appreciate you guys. Thank you so much for hopping on. I'll see you guys tomorrow morning. Have a blessed day, fam.